This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, after a big move Monday on the heels of Friday's jobs report release and the closed market with the gap open on Sunday night, gold and silver have filled those gaps and then some here as we record on Thursday, Eric. And really, as we were discussing before the show, it's another classic example of the cartel managing the market post a positive event.
Indeed, the employment numbers have people suddenly reflecting on the fact that the economy isn't as strong as the Bureau of Labor Statistics would like everyone to believe. And we've talked a lot about how the unemployment number series in particular is probably the most distorted and most manipulated set of data coming out of the government. And it almost looked like they just could not deal with all of the seasonal adjustments and other machinations of manipulation they did with previous reports, and they had to kind of reconcile something. So this Friday report came in like half of what Wall Street expectations for job creation was. So it was a pretty big shock, and I believe it also was the first time in well over a decade, I don't remember the exact amount of time, but that an unemployment report was issued when the markets were on holiday. So Monday came in, and then we also had Dudley, Fed board governor, talking down the prospects of the dovish tone that was set earlier in the previous week when the FOMC minutes were released. And this jawboning game is going back and forth between the hawks and the doves on the Fed, and the reality is that they're just trying to manage the situation. And here we are. That was a very bullish news event that suggested that interest rates would not have to be raised anytime soon, and gold investors reacted appropriately. But anytime we have a fundamental trigger that shapes the market in an appropriate fashion, the cartel comes in, and they'll sidestep the initial rush because they're basically doing battle with, for the most part, paper traders on the COMEX, and to a lesser extent on the LBMA, the Western conventional thinking financial world, going after gold, trying to buy something that makes sense economically based on historical rules of economics and financial markets. And earlier this week, it was Wednesday, we had discussions about FOMC minute releases yet again, and Dudley talking yet again in the media. And if you look at the Kitco charts for each day, Monday onward, you can see the big jump Monday. But then for each day following, you can see that if you were trying to paint the tape in a way that would destroy sentiment, you'd target the closing of the day to be below the previous day. And that's the kind of pattern that you see for key time points in the 24-hour trading cycle for gold. And so, this is just yet again another textbook example of the kind of tape painting they do to change the way the sentiment is for the gold sector. But even though we have made a move that attempted to retest the November lows, the shares as well as the bullion are holding up, and the ongoing strong demand in Asia is keeping a lid on the ability for the cartel to push things as low as they'd love to. I mean, you'd have to assume the cartel would love to see silver at $9 and gold at 900, but they just can't get it down there because there's just too much physical demand. So I think, in reflecting where we've been so far in 2015, and the obvious indications from the cartel that they're willing to be very aggressive in fighting and keeping the price of gold down, as we can see in this week, I think there's a pretty decent chance that we're going to probably not get very far in gold and silver for a number of months until people start pricing in the next seasonally strong period, which would be around September and onward, going into January, February, March next year. That portion of the year is always stronger based on the Indian wedding season and other factors. But this year in particular, I believe we're going to see China and the whole question of their long-term strategy when it comes to the SDR basket unfold. We have already seen Christine Lagarde openly admit in public that China will be added to the SDR basket. It's a question of when, not if, quote-unquote. There's been an indication from Germany, leaks out of their financial establishment, that they also are in agreement with China coming aboard. And China herself, if you look at statements among people within their central banking and academic and political community, they're few and far between, but if you piece the puzzle pieces together, they point to a kind of all of the above strategy, or an all of cart type strategy that China is adopting. You'll recall Doc did about 6 months ago or so when people would debate whether China would do the SDR or they would establish their own backing of a reserve currency directly because they have so much gold, and they're doing the Asian Investment Infrastructure Bank and the Shanghai Cooperation and on and on. The new bank that's being developed by the BRICS, so on and so forth. I mean, China would have the capacity in probably 5 years to literally just flick the switch and become a world reserve currency backed by gold if she so chose. But later this year, I think an interim stage that China will take will be to become a member of the SDR basket. And a number of things are going to happen when that transpires. Before it happens, most likely China is going to declare how much gold she has. They're going to under-declare by a significant amount. I believe China easily has over 10,000 metric tons right now. But I believe that they'll probably come in and want to be above Germany, but not above 4,000 metric tons. So sometime in the next couple of months, I anticipate that China is going to make an announcement of somewhere in the neighborhood of just under 4,000 metric tons of gold. And that's the catalyst everyone is going to be happy to see, because I think that that's going to readjust the conventional financial thinkers of our planet when it comes to the role and importance of gold, and that it'll create initially enough paper demand to put huge pressure on COMEX and LBMA such that the cartel will have to let higher prices liberate further supply for them to be able to manage prices down at some future date. We had a more aggressive tone. So in other words, it's a version of the managed retreat that Gaddis speaks about a lot of times.
And Eric, I want to go back and touch base a little bit here on your comment about the cartel painting the tape on the daily charts this week with managing the close lower than the previous days. If you zoom out a little bit and take a little bit longer perspective, not only have they painted the charts on the daily charts, but if you look at a 6-month chart on silver with this week's action, they've painted pretty much a classic head and shoulders chart pattern in silver, which if you're a technical analysis trader and that's all you trade on is TA, it looks like a move to $12 to $13, and silver is set up with that. Now, I'm not saying that I believe silver will head to $12 or $13, but the cartel uses technical analysis against people in this market. That they've done that for years. So it's not just the daily charts, Eric. It's some of the longer-term charts as well.
Yeah, and it's important, too, for our audience to recognize that more money is traded by technical analysis than anything else. And even the algorithms that are kicking around stuff on the New York Stock Exchange, 80, maybe as much as 90% of the volume on the New York Stock Exchange are computer-driven trades. And that can be quantitative in terms of looking at headlines and trying to make a quick trade through the high-frequency trading algorithm systems, but it's also just generic technical analysis. So you have that whole fast money crowd, you've got the hedge fund fast money crowd, you've got the standard financial thinkers in Wall Street that even though they may claim to be fundamental analysts and they may be managing $50 billion portfolios or what have you, the first thing that they probably do is look at charts when it comes to deciding whether or not they're going to make an investment decision. So even though stackers and people in the precious metals community, rightly so, have a very negative attitude about technical analysis, because frankly technical analysis applied to the precious metals market is like wanting to court a 2x4 smack to the forehead. It just doesn't work very well. But the bottom line is that not a lot of people know that, and that the conventional financial world makes a huge emphasis on technical analysis when it comes to their decision making. So the cartel knows this, and they use it to their advantage.
Gears a little bit here to a couple other big stories that have crossed the wire here today and this week, Eric. The biggest, I think, for our listeners is a report we posted on SilverDoctors on Thursday that the state of Louisiana has updated and revised an original law passed in 2011 and have, in effect, banned the use of cash transactions on used goods in secondhand goods stores. And not only that, the law is a bit worse than that, actually. Not only does the law require payments be made via check, electronic transfers, or a money order made out in the customer's name issued to the seller. The new law requires all transactions. The sellers are required to provide the state documentation of a description of the goods sold, the client's personal information, including name, address, as well as driver's license number, and even the license plate number of the vehicle that took them to that store. Now, personally, I think likely the intent of the law is probably not capital controls, even though essentially that's what it is. But the intent of the law probably, if I had to guess, was some idiotic lawmaker who thought, hey, this would be a great way when we have anybody steal something, we'll just have all the documentation and we won't have to do any work to get an arrest. But unfortunately, that takes away the freedom and liberty of the other 99.9% of the population who simply wants to buy and sell using legal tender.
Yeah, and it's really sad to see these kind of developments, because basically it is pointing towards making capital controls viable and efficient in the future. We're going to most likely see some kind of excess profit taxes on gold and silver if we have very serious financial market turmoil, and laws like what Louisiana put into place, and in fact that whole Justice Department attack on pawn shops and gun stores and so forth, and putting pressure on them to more regulate the markets, is really just an attempt to make an effort to shut down on the black economy and make sure that people are paying their fair share of taxes, because as our government slides down the slippery slope of greater and greater debt and financial turmoil, there's one thing that we can all be assured of is that the federal government's going to want to pursue every penny that they can possibly get from taxes. So anyone buying gold and silver, be sure you save your receipts. You may need them to justify not having the IRS declare your basis for your purchase of your American Eagle as being zero, and therefore the 70% excess profit tax that they'll apply will apply on the entire dollar value of the coin, never mind subtracting the basis price at which you purchased it for. I mean, these are all scenarios that unfortunately we have to keep in the back of our mind, because this is the world we live in. So that's why this story in particular has relevance for precious metals owners.
That I thought we'd cover today was the news out yesterday or Wednesday, Eric, that JPMorgan has spent hundreds of millions of dollars developing an algorithm to identify whistleblowers in their bank before they become whistleblowers. So pre-crime, if you will, detecting activities, comments. They're monitoring all typed words, phone conversations, and have what appears to be an NSA type of system to monitor everything, and algorithms to determine the intent of employees who might potentially be doing something detrimental to the firm. And this comes on the heels of, I think about 4 or 5 months ago, they instituted a policy for all employees to tattle on or report any suspicious behavior from any other employee, kind of like what was done in Germany a few decades back, with the incentive in JP Morgan's internal of, well, if you don't do this, you're not going to get big bonuses. Your bonus pool is going to be smaller. So for the good of your wallet and your bonus and your Mercedes at home, you want to make sure you rat on your desk partner.
Yeah, and it's got the advantage of helping them figure out, who's going to be the next banker to be thrown off a building or something. Put the fear of God into some of these traders, and have moral suasion to keep them trading honestly. Yeah, right. But it's good to know that Jamie Dimon's looking out for his shareholders and making sure that the company's equity is above board and following the law after, what, $30 billion worth of fines or something like that in the last 4 years for all the various things they've been busted on, but that they settled on when it came to all the various regulators and whatnot. I mean, JP Morgan earned something on the order. I mean, I don't know what it was last year, but the year before, when I last looked them up, they had net income in the neighborhood of about $20 billion declared. So they've paid more in fines than what they make in an average year.
And I believe the Bloomberg article said they had hired 2,500 new employees just with this in mind, just to prevent legal snafus.
2,500 narcs, huh?
2,500 new JPMorgan employees just to prevent legal snafus. I mean, that, as a small business owner, that's just mind-boggling. Well, shifting gears back to physical, Eric, the story out today here on Thursday is that Jefferies Bach, the investment bank, who's also one of the authorized purchasers of the U.S. Mint, is one of the main wholesale distributors of U.S. Silver Eagles here in America, bought out by the French bank Soc Gen today, and early reports that I was given from the head of their metals desk is that they're going to be shutting down the metals desk at Jefferies Bach, and they will not continue that at Soc Gen. So as we were just chatting, it's probably not a big revenue stream right now for Jefferies in this current market anyways, physical-wise.
Yeah, and I would be curious to know, what other authorized participants are in fact brokerage houses. Do you know? Or brokerage investment banks? Because Jefferies, as in terms of their total revenue, this precious metals operation most certainly was just...
Scotia is probably one of the other main ones, and they're one of the biggest ones.
Yeah, and they also do a lot of business with Canada and the Canadian Mint and are a big player.
Right. Most of the other players, their main focus is in the physical bullion, not just as one desk in the brokerage.
Do you think that this would have any increasing leverage to Scotia Makata and their role as a bullion bank?
It'll certainly be interesting to see. It'll be interesting to see what the shakeup happens. As our listeners are aware, it's a very complicated and very stringent process to apply for authorized dealer status. Not simply anyone can apply, like the Royal Canadian Mint pretty much allows anybody can apply to be an authorized purchaser from the Royal Canadian Mint, and they don't sell at the same prices to everyone, but the U.S. Mint has very stringent requirements for authorized purchasers.
Well, we should probably touch a little bit on what's going on around the world geopolitically and with Greece as well. Greece made good on their 450 million euro payment to the International Monetary Fund this week, and we've seen this basic back and forth going on between Germany and the rest of the EU and the Troika parties versus Greece, and yet again we see the same pattern where people in the Greek faction are saying, well, next month in the negotiations we got to deal with is going to be far more difficult and everything may fall apart then, and that's their game theory strategy to keep the Europeans on their toes, to be more inclined to give concessions. And then flip side, the Europeans are saying, hey, you guys can go jump in the lake. And within the last month even, we've had talk within a major percentage of policymakers within Germany speaking openly about, hey, Brexit maybe wouldn't be such a bad idea. So, back and forth, this whole story has been basically following the same script with just a reboot every week and a half or so since mid-February. And I think that the end game is that most likely, Greece may not exit, but that there's going to be significant changes, when it comes to their relationship with Germany and their creditors and whatnot, and that Germany is either going to give a discount haircut to the loan, and that the Troika partners in turn will follow that lead, because Germany is definitely setting the policy here. And we're going to see this unfold June, maybe May. Probably May, actually, more than I think about it, for this year, in terms of the discussions that are leaked in the press. And if that does not happen, and it's really impossible to predict exactly what's going to come down here. It's really more a matter of assessing what are the most likely scenarios and assigning probabilities for those outcomes. And I think that we got probably a 50-50 kind of scenario going on here, where either the Europeans are going to do a haircut, or Greece is going to do some kind of a combination that borders on Brexit, or is a flat-out 100% Brexit out of the euro, and Greece falling more into line with the rising power in Asia, with relations increasingly getting better with Russia and China. So all of this fits with what we were talking about before in terms of the SDR basket and the shift that we can pretty clearly see is going to happen later this year. I mean, when we're trying to figure out timelines and forecasts and all of that stuff, it's very difficult to do. And again, there's no way to be 100% certain as to what's going to happen in the future, but these IMF renegotiations for the SDR basket happen every 5 years, and the next formal meeting is going to occur in October, but there's going to be a lot of machinations behind the scenes earlier than that. And we may learn as early as September that China is going to take a role in the SDR basket. And you've got that in relatively close proximity timeline-wise to what's going on with Greece. And then when you add on top of that just the probability of further escalation of warfare in the Middle East, it's going to be a backdrop that's going to be hard to see the cartel fight prices rising as they have in the last month and a half, 2 months, or basically since the peak of January 21st. So, as much as the current trading stinks, as much as the sentiment is as low as it's ever been, as much as we have seen in the equities side of the precious metals market pricing action that is indicative of a bear market period that has never been equaled before in mining shares. I mean, the degree to which we've seen pain in the precious metals market is on par with periods before that were as bad as it ever got. In the grand scheme of things, with vault supplies having been vastly depleted ever since the 2011 uptick in cartel aggressive management, and the manipulation from 2013 and the April, I'm trying to remember the exact dates, April 12th through the 15th. On that weekend, we saw Merrill Lynch dumping 400 metric tons of gold in 10 minutes, and all the other crazy things that speak to the level of cartel manipulation in the last couple of years that has not really been equaled in any other period of time. I mean, it's very ugly out here, and it's hard to keep one's focus on what the insurance necessity of owning precious metals represent. But I think we're going to finally see some changes in the not-too-distant future, even though it's unbelievably painful and discouraging now. So we'll see. I mean, these things are not necessarily good things developing, and that's why gold and silver and bars are going up. It's partly a reflection of the fear trade. But there's a love trade, too, and a lot more just generic demand for the purchase of precious metals and jewelry and whatnot in Asia.
And if India completely repeals their customs duties and goes back to what they had previously, as is widely expected, the love trade will only increase and potentially substantially in India. Even with the restrictions they have on now, they still imported 100 metric tons last month, and annualized that's 1,200, and they have not exceeded 1,050 metric tons annually, at least according to official estimates, ever in terms of gold imports. So, we're already on par. And we're not in the wedding season yet. Yeah, and China as well is looking, based on the offtake from the Shanghai Gold Exchange, to easily import more gold and consume more gold from their domestic mines than they ever have this year. I mean, if you drew a list of fundamentals that are positive for the precious metals market and knocked them off one by one, itemizing it, I mean, it'd be pretty easy within a short period of time to whip up 50 or so points that are just exceptionally positive demand drivers and supply side drivers too, for that matter. But in a world where paper gold trumps physical ounces at 100 to 1, if not a heck of a lot more, depending on what exchange you're talking about, we have to labor through the process of waiting, at least in the West, for people to, among the conventional finance world, to wake up and start buying some of the paper and making the purchases too big for the cartel to fight and for them to do a managed retreat. And that's the stage we're in right now, until we get some kind of system-type resets or partial resets. And I would describe the SDR basket inclusion of China later this year as a partial reset, because it will change sentiment, it will change
the international financial structure will not represent, a gigantic body blow to the dollar, and the dollar crashing 40% in 1 month following an SDR inclusion, and all of the fear porn style analysis that we get a lot in our sector. But it will be very, very significant, and over the course of a year or two will in fact have the potential of leading to a chain reaction for dollar losing 30% of its purchasing power or whatnot. It will be an evolutionary kind of thing, but it is amazingly painful nonetheless.
I'm reminded of what Jim Sinclair always says: be right and sit tight. And so while the cartel paints head and shoulders charts on silver, well, in the short term, again, sentiment has never been worse. Really, in the entire bull market, sentiment's never been worse. But take a few more steps back and look at the big picture. Fundamentally, nothing has changed, and the fundamentals really for physical have never been better. So take advantage to add to your insurance while it's on sale, not when it's selling at a premium. So we'll wrap this week's show there. For the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.